Hey there, Singaporean investors. Tired of sifting through endless news trying to figure out what truly matters for your SGX portfolio? Or maybe you're wondering how today's market moves impact your investments. Welcome to the Investing Iguanas Daily SGX Market Digest for Wednesday, August 27th, 2025. I'm Iggy, and in the next few minutes, I'm cutting through the noise to bring you the critical updates, hidden insights, and Iggy's unique take on exactly what happened on the SGX today and what it means for your money. No jargon, just clear, actionable intelligence you won't find anywhere else. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 58,000 likes. I produced over 1,000 videos with more than 600,000 watch hours as of August 2025. I also focus on regional and global economic trends, giving you that broader context. So let's dive into today's most important SGX movements. You don't want to miss what's impacting your portfolio right now. Today's market showed mixed signals as institutional activity ramped up across several key sectors, while regulatory changes in international shipping created some ripple effects for local logistics players. Let's start with OCBC, one of Singapore's banking heavyweights. The big news here is their fresher $1 billion fixed-rate subordinated notes issuance under their massive $30 billion global medium-term note program. This isn't just routine corporate financing. It's a strategic move that tells us OCBC is actively strengthening its capital buffers while locking in funding at attractive rates. What makes this particularly interesting is the timing. With regional banking sectors facing headwinds from economic uncertainty, OCBC's ability to secure just $1 billion in funding shows strong institutional confidence. Their shares saw a modest 0.06% uptick today, which might seem small, but for a bank stock, this kind of stability during capital raising activities is actually quite positive. The proceeds are earmarked for general corporate purposes, giving OCBC flexibility to deploy this capital where opportunities arise. Now here's where things get spicy. Keppel gained 0.96% while Citrium dropped 2.58%. And there's a very specific reason for this divergence. Keppel just initiated arbitration proceedings against Citrium for a hefty $68.4 million claim. This isn't your typical corporate dispute. It's tied to Brazil's massive Operation Car Wash corruption investigation. Here's the backstory. Back in 2022, when Keppel's offshore marine business merged with Sembcorp Marine to create Citrium, provisions were made for $82.4 million to cover potential liabilities from this Brazilian corruption probe. Fast forward to this year, Citrium agreed to pay Brazilian authorities 728.9 million Brazilian reals, about 168.4 million, as part of leniency agreements. Keppel now claims 68.4 million is owed under the original indemnity terms. But here's the twist. Citrium argues that the indemnity expired in February 2025, and they've already reversed the 82.4 million provision in their 2024 financials. They're planning to defend vigorously, according to their filing. This legal battle could drag on for months, creating uncertainty around Citrium's financial position while potentially providing Keppel with a significant cash windfall if they win. SingPost took a hit today, dropping 2.08%, and it's directly tied to major changes in U.S. shipping regulations. The company had to suspend standard postal services for commercial items to the U.S. starting Monday, just ahead of Friday's elimination of the de minimis exemption that previously allowed packages under $800 to avoid duties. SingPost's response has been to introduce a new delivery duty paid corporate service where duties and taxes are calculated at destination and billed back to the sender. They're also pushing customers toward their SpeedPost Express service, which can handle the new customs requirements. What's concerning here is that at least 25 countries have suspended parcel deliveries to the U.S. due to these regulatory uncertainties. This suggests the impact could be more widespread and longer lasting than initially expected. For SingPost, this creates both challenges and opportunities. While they lose some of their standard postal revenue, their premium SpeedPost services could see increased demand. The question is whether the higher margin premium services can offset the volume losses from suspended standard services. Wing Tai's results show a classic mixed bag scenario. Revenue jumped 64.4% to $117.5 million, which sounds great until you dig into the details. Their net loss narrowed to $71.1 million from $99.2 million previously. So they're losing less money, but they're still losing money. The revenue boost came mainly from development property sales in Singapore and Malaysia. However, their Hong Kong operations continue to struggle with significant impairment and fair value losses. What's particularly telling is that despite the losses, Wing Tai is maintaining a 3-cent dividend per share. This signals management confidence in their cash generation ability and commitment to shareholders, even during challenging times. All right, let's pull all of today's movements together into Iggy's daily market take. What we've seen on the SGX today, particularly with the mixed performance across different sectors, really highlights some crucial themes for us retail investors. The most important takeaway today is how regulatory changes and legal disputes can create immediate winners and losers, even when the underlying business fundamentals haven't changed overnight. Look at the Keppel Citrium arbitration. This legal battle stems from events that happened years ago, yet it's moving stock prices today. For SingPost, we're seeing how global regulatory shifts can force rapid business model adaptations. The company that adapts fastest to new shipping regulations could gain significant market share. SingPost's quick pivot to premium services shows operational agility, but the real test is whether customers will pay higher prices. Banking stocks like OCBC remind us that in uncertain times, companies with strong balance sheets and access to capital markets have significant advantages. Their ability to raise $1 billion shows financial strength that could translate to growth opportunities when competitors are struggling. The Wing Tai situation underscores a key point about property developers. Revenue growth doesn't always equal profit growth, especially when you're dealing with asset impairments. Always look beyond the revenue headline to understand the quality of earnings. Think about how your current holdings align with these broader trends of regulatory adaptation, legal risk management, and capital strength. The companies navigating these challenges best today are likely positioning themselves for stronger performance tomorrow. That's the scoop for the SGX today, Wednesday, August 27th, 2025. Navigating these daily market shifts is crucial for your wealth growth right here in Singapore. If you found this digest helpful and want to get my real-time analysis, urgent insights, and a daily heads up on crucial market movements delivered to you up to a week before anyone else sees them, then our premium membership is for you. It's just $3 a month, about the price of a cup of coffee. Think of it as your daily dose of market foresight directly from my desk. Ready to stay ahead in the Singapore market? Just click the link in the description below to become a member. Don't forget to like this video, share it with your fellow investors, and leave a comment below with your thoughts on today's market. I always read them.